quality in terms of structuring, speed of execution, but it comes with its own set of intricate regulatory pricing, disclosure, and procedural requirement. And some of the procedural requirement is also very tough. In this webinar, we will understand an end-to-end process of preferential issue for listed companies and helping participant understand not only the legal framework, but also the practical nuances of compliances requirement and the practical challenges which company normally face. Today, we will discuss key points on this issue: regulatory framework, eligibility criteria for issuer and investor, pricing mechanism and valuation, disclosure and reporting requirement, practical challenge and best practices, and the case studies. Now, friends, this webinar is important and interesting in two aspects. We have requested two learned speakers from National Stock Exchange, Mr. Lokesh Bhandari and Ms. Deepti, because these people, when they are receiving, because preferential allotment is a stock exchange prerogative and they approve. So when we were discussing with the stock exchange is always facing lots of issues with the companies filing companies proposal, and then they have to revert back, they have to come back, and this is to and fro, it is taking place. So this program we are doing with NSC, and the purpose of program is that to tell through the NSC team that what companies are doing mistakes. So no doubt we will discuss about the practical aspects, but we will discuss that also, that what companies are facing problems and what stock exchanges are facing issues when companies are filing. So we have invited Mr. Lokesh Bhandari from NSC. He is Associate Vice President Listing at NSC. He has worked experience in NSC around 1 decade, where he had been part of entire listing department, both listing approval and listing compliance. Further, he is also very closely working with various SEBI team and actively discussing on various regulatory framework. I welcome Lokesh for this program, and I know Lokesh is, there are so many things are going on, but he has accepted our request and he has joined us. I welcome Lokesh for this program. Then we have Deepti. She is Senior Manager, Listing Compliance at NSC with over 14 years of diverse experience across regulatory compliances, business requirement, development, project management, application, testing, data analysis, and MIS reporting. Deepti is coming his first time in our webinar. I welcome Deepti, and I heard a lot about you, about your sharp intelligence on this particular compliance aspects of the listed company. So we will get benefit of your expertise and your the way you handle the preferential allotment cases and the companies when they are applying, when you are approving, and multiple things you are doing. I welcome both the learned speaker from NSC. Then we have requested very learned person from the industry, Mr. Sanjay Jain. He is seasoned financial professional with over 3 decades of experience across investment banking, corporate finance, and advisory service. He currently manages the family office of JK Group, JK Enterprises, and serves on the board of several listed companies and private companies. Since 2005, he has advised prominent corporates such as Somani, Ceramics, Jubilant, Radico Khaitan, Bacardi, and Birmingham Pincus, amongst others. So Sanjay Jainji has a wide experience, and I have interacted with him personally. He is one of the sharpest mind in the financial world, and a very intelligent person who understands things very fast. That is my observation dealing with him. And today, when we'll discuss, we will understand his part, because he has involved in so many companies preferential issue because of the consulting and various advising, and he has seen this. So we will understand that what are the problems company normally face, what they should do this, and what regulatory simplification is required. I welcome Sanjay ji for this program. Then we have Anjali Agrawal, Partner Head, Capital Market Service, Corporate Professional. And then we have Sanchit Vijay, Partner and Head, Deals and Valuation, Corporate Professional. So both will discuss about various aspects. Before giving some initial remark on the topic, I just want to inform all of you that 11th July, Friday at 4 o'clock, we will do our program on revised RPT industrial standard. As you are aware, RPT standard issued by Industry Standard Forum. SEBI has issued a circular on 26 June and notified revised RPT industry standard for promoting minimum information to audit committee and shareholders for approval of RPT. And this revised standard has been formulated by the Industry Standard Forum, comprises of representative of ASSOCHAM, FICCI, CII, in consultation with SEBI under the aegis of recognized stock exchange, because NSE team and BSE team was also part of this. So they have done this particular standard, and that is a very, very ticklish topic, and where every corporate is concerned. And we will threadbare discuss each and every point, understand your point, try to solve this. If it is not, then because I was the chairman of this standard subcommittee, so we will try to solve problems of the industry by suggesting changes to the regulator. Friends, before going to the topic and handing over mic to the Anjali, I will just tell you the structure of the program. The structure is, first Anjali will cover this aspects of the present aspect, present law, present practical issues by Anjali. And then Lokesh and Deepti will cover the stock exchange part of view and what problems, what are the issues stock exchange face when the company file, and what are the things they want to advise to the industry that when they file this, they should not do this type of mistakes, and what are the issues they are facing. And then I will request Sanjay ji to give his experience, his suggestion to improve this. All these things we will compile and we will submit to the regulator for modification. Regulator is always asking what you should do. Friends, as you are aware that this the preferential issue is a strategic lever for realigning ownership, attracting an anchor investor, and even consolidating promoter holding. It offers speed, certainty, and customization. That is very important as compared to QIP and the right issue. And I was just thinking that what term we should give. Preferential issue is Swiss Army knife of capital raising, fast, flexible, and focused. That is the things. Now, in last 4 years, if I see the comparison, Shivam, can you just show? So you can see that in 4 years, the various company has raised, I think, more than 250,000 crore rupees through preferential issue. 22, 86,000 crore, 472 issue, then 655, 45,000, 80,000, and then April to June, you can just see 52,000 crore, 291 issues. So you can understand how popular this instrument is. And amongst the financial service, real estate, pharma, these are the thing. And another thing is, in this you can issue convertible instrument, you can issue warrant, and warrant is constituting 35%. Now, why company prefer this? Because there's a tailored deal make, because I got some investor, he wants to invest, and I can make the tailored deal making things where I can select the investor and align with our strategy, and he can put money. Then promoter also sometimes infuse money or get money through the warrant and other equity because they don't want to go for debt burden. Then bridge financing is another aspect, and this often use strategic partners in joint venture and cross holding. That is another aspect. Some of the flip side is also there, because 90 days and 10 days trading period, the pricing is there. No doubt it's a frequently and infrequently has a different pricing, but somewhere it is there. And then warrant has a 25% payment in 18 months they have to pay. and this 18 months period is bigger. So people are always confused on this aspect, that why this is giving, and this is creating a speculation. And then if you see what is happening in another part of the world, then pipe deals in USA have full transparency, detailed use of proceeding, and are also closely tracked by activist investor. UK has a preemption right, give existing shareholder a say before dilution. No speculative warrant without upfront payment in many jurisdictions. In India, it is allowed of 18 months. India is one of the few markets in the world which has a long exercise window for warrant. Now, what are the reforms required for this? SEBI should introduce the dynamic price mechanism linked with the valuation report, because sometimes market value, though it is a frequently trade, even it is not giving the correct picture. PNB housing finance case is there for valuation for point of view, but that is also not very clearly defined in the law. That can come. Then the encourage real-time disclosure use of money. For ease of doing business, they should create some more simplification in this, and they should follow. Because what is happening, some of the very important points which are there, like if you sell shares, then you are ineligible. Any promoter group or promoter here, they are selling even one share, then the entire group is ineligible. This is slightly tougher for the companies, promoters, and the people who want to subscribe, because sometimes what is happening by mistake, sometimes what is happening, there is a some competitive rivalry, another thing. There is some dispute going on with the promoter group, and somebody is doing this, and they are disturbing your entire thing. All these things we will discuss, we will share, and we will have words with this. Now I will request Anjali to give the overall view of this particular concept of, and tell us where the main important pinching point which can help. Over to you, Anjali. Anjali, you have to unmute yourself. Yeah, your presentation is visible. Go ahead.
Yeah, am I audible?
Yes.
Yeah. Thank you so much, sir, for giving the background to the preferential allotments and how the data over the years, how the companies over the years have used the preferential issue route for the fundraising. The very name preferential issue shows that it is the most preferred route for fundraise. Over the years, you have shown the data for last 4 years. My eyes stuck only on the last quarter data, wherein more than 290 companies have come out with preferential issues and have raised approximately 52,000 crore rupees. So this shows that the companies, how much they are actually utilizing this method for the purpose of the fundraise. And even myself, I have explored, I have witnessed this thing ever since 2003 when we started our business. I think we have helped more than 700 listed companies do the fundraise by way of preferential issues. So this has always been the most simplest route of fundraise because there were less approvals involved. There were not many complications. But still, over the years, we felt that in spite of this simplicity, there have been many things which wherein while companies, while doing the preferential issues, they were going somewhere or the other, they were going wrong. Either they were not taking in principle approvals. There were many cases in the past wherein in principles were not taken, wherein the pricing was not done properly, or which was leading to various delays or rejections, or even the corrigendums being issued to the preferential issues. So that is where NSE also came as a helping hand, and we decided to do this program. So I'm trying to just just break up the entire preferential issue thing by bits and pieces so that it becomes easier for our audience and our listeners to understand. So when we talk of fundraising, IPO we all know is the first time when a company gets listed. उसके बाद मेरे पास ऑप्शन है फंड रेजिंग का. आई कैन प्लान अ एफपीओ फर्दर पब्लिक ऑफर विच we have not seen many FPOs in our capital markets history. Then the rights issue has been a very, very preferred mode for last 6-8 months, or rather I should say ever since COVID. Rights issues have been a very preferred mode for fundraise. But having compared it with private placement, it is yet to take up. So private placement comprises of preferential issue or a QIP issuance. A very basic question which is asked to us is what is a private placement or what is a preferential issue? What's the difference between the two? So many a times these two terms are used interchangeably. Preferential issue is a subcategorization of private placement wherein, if I talk about a listed entity, issue of specified securities. Specified securities comprises of equity and or convertible securities, warrants, CCPS, CCDs, by any listed company to any select group of people. This is the punchline. This is the differentiating point when we talk about a preferential issue or a rights issue. And Chapter 5 of ICDR contains the detailed provisions with regard to it and on a private placement basis. There is a very clear-cut exclusion that ESOPs, ESPS, sweat equity, and depository receipts will not be a part of preferential issue. Types of securities, equity, we can issue equity shares, we can issue warrants, we can issue any of the other convertible securities, which can be fully convertible or which can be optionally convertible in the form of CCDs, in the form of CCPs, CCPS, in the form of OCRPS. There can be a very varied combination of these. But out of all these securities, warrants is actually being utilized in a big way, wherein it gives me as a company the flexibility to call for the money in stages, 25% upfront and balance 75% over a period of 18 months. Or if the promoter wants, if the company wants that I want the money immediately, I can ask for the entire conversion amount, entire 75% immediately after the allotment of warrants as well. So this is a diagram explaining the entire gamut of private placement and preferential issues under the Companies Act and as per the ICDR regulations. So section 42 is the mother section. It defines the entire private placement gamut. Any company doing any kind of a further allotment has to be in compliance with section 42. Then section 62 talks about equity and convertible securities. Then comes the issuance of redeemable preference shares, and which has to be in compliance with section 55. And if we want to do debentures, then provisions of section 71 are to be kept in mind. But in this presentation, we are restricting ourselves to equity and specified securities only. ICDR mandates certain prerequisites without which a company cannot come out with a preferential issue. The allotment to be made has to be fully paid up. Many a times we are asked this question that can we call the way we do in rights issue or a public issue? Can we do partly paid up shares in preferential issue? Answer is a clear no. Except if we are doing warrants, 725 and 75 can be the segregation. A special resolution, shareholders' approval is required. Allotment has to be done in a demat mode. Physical allotment is not permissible at all. Then company has to be in compliance with the conditions of continuous listing. MPS compliance होना चाहिए, सारा आपका listing regulation compliances होना चाहिए. All these provisions have to be fully complied with. The allottee has to have a PAN and company has to obtain the PAN from the concerned person. Plus, a very important requirement which even the exchanges exchange official's location. Deepti would agree with me. No dues to the board or SEBI or the stock exchanges should be there. So even if any past penalty has been there, which has remained missed your attention, and you decide to go ahead with the preferential issue, exchanges will not be granting that in principle approval till the time till the time either a waiver is done or the payment is done. Then there are certain disclosures in the notice which are needed to be done as per the provisions of ICDR as well as Companies Act. Now, there are certain categories of people who are not eligible for allotment at all. Any sale by the proposed allottee during preceding 90 days of the relevant date. Relevant date I'll be explaining in the subsequent slides. There should not be any sale at all during the 90 trading days. But the first condition is with regard to the allottee per se. But if the allotment is proposed to be made to any person belonging to the promoter or promoter group, then this restriction extends to the entire promoter and promoter group directly. So even if I am the promoter of the company, I have to make the allotment to myself, but my husband has sold a certain shares in the company. Even I'll also be ineligible. So this thing has to be kept in mind. Then if the promoter and promoter group have unsubscribed or cancelled any of the warrants during preceding 1 year, and if the promoter or director is a fugitive economic offender, these people become ineligible for the allotment. Now, as I said, relevant date. Relevant date in a preferential issue is the most important date, and we have seen companies want to do the preferential issues on a very fast track mode because of the relevant date, because my pricing is dependent upon this relevant date. Relevant date is 30 days prior to the date of the general meeting wherein the shareholders' approval is sought to be taken. So we have given an example. If my general meeting date is 30th July, relevant date would be 30th June, and 90 days or 10 days backwards would be the calculation of the issue price. So the more I postpone my general meeting, accordingly, my price will keep on changing and my issue price will also get impacted accordingly. So that is why companies want that the notice should be dispatched ASAP and the general meeting should be held sooner the better. Now, tenure of convertible securities. If I have issued warrants 2575, or if I have issued CCPS, CCDs, they do not have a permanent life. They have a life of only 18 months, within which they have to be converted into equity shares. Simultaneously, obligation is cast on the company that if a person exercises the option to convert the securities, convertible securities, allotment has to be made within a period of 15 days. Otherwise, the monies will have to be refunded. Lock-in is the most critical aspect. And when I talk about corrigendum by the exchanges, so lock-in is not on the shares preference further shares being allotted. It is on the pre-holding as well of the allottee. So if my pre-holding is not correct in the notice, if my pre-holding is not mentioned correctly in the IP documents, and exchange later on finds out that no, your holding was not 5,000, it was 10,000, you will have to have the lock-in done on the entire 10,000. So that is a very important aspect. Before initiating a preferential allotment, the company should take the transaction statements of the proposed allottees to correctly check what is the pre-pref holding, because even the pre-pref holding has to go in lock-in, and accordingly lock-in is needed to be imposed. So pre-pref holding depends upon what kind of security I'm issuing. If I'm issuing equity, then the security goes in lock-in for a period from relevant date up to 90 trading days from the date of trading approval. In case of convertible securities, it is 90 trading days from the date of allotment. And in respect of the equity shares being allotted, that are being allotted on the preferential basis, in case the allotment is being made to the promoters, then the lock-in period is 18 months from the date of trading approval. In case of public shareholders, this period is reduced to 6 months from the date of trading approval. Convertible securities or warrants in case of promoters or public the lock-in period is 1 year from the date of allotment. Payment of consideration, as I've already said, in case of equity shares, CCDs and CCPS, it has to be entire 100% at the time of allotment. In case of warrants, there's a staggered payment system is permissible, 25% on allotment and 75%, that too within a period of 18 months in one or more tranches at the time of conversion. Now, this is a very interesting part with regard to the convertible securities that under the takeover regulations, we have any of the promoters can acquire only up till 5% under the creeping acquisition route. But the moment I talk about the allotment of convertible securities, I invariably get 2 financial years, because 18 months would comprise of 2 financial years. And if the issue is planned properly, we can even get 3 financial years, as a result of which 5% over a period of 3 years can be allotted at the price which is decided today. One more important condition, that in case of an issue size of more than 100 crores, a monitoring agency is needed to be appointed. Monitoring agency can be any of the rating agencies which are registered with SEBI. So it's needed to be appointed. Allotment is to be made within a period of 15 days from the date of the shareholders' approval or regulatory approval, whichever is later. So if we receive shareholders' approval first and in principle is received later, 15 days will start from that in principle approval, or if it's vice versa, then from the shareholders' approval. In case it's a case of SEBI exemption under the takeover regulations, then such timeline as may be specified in the SEBI order. In case of a resolution plan approved by NCLT, this period of 15 days is exempted. Pricing, the most important aspect while deciding upon a preferential issue or any kind of a further issue, I would say, that in case of a preferential issue, it depends upon whether the shares of the company are frequently traded or infrequently traded. There are different parameters for determining the pricing under frequently or infrequently. When we talk about frequently traded share, it means that the traded turnover on any of the stock exchanges during 240 trading days. We have to see it is 240 trading days preceding the relevant date should be at least 10% of the total number of shares of that class in the company. So if it is less than 10%, we'll fall within the ambit of a infrequently traded share, and accordingly, we'll have to obtain a valuation. So in the regulations, at a few places, the concept of registered value valuation is there. Otherwise, CA certificate is sufficient, but at many places, registered values valuation is required. In case of frequently traded shares, we have to do the pricing on higher of 90 trading days or 10 trading days VWAP. But in case my articles prescribe for a valuation, I have to take the registered values valuation, and highest of the 3 prices is needed to be taken. Then if the shares are infrequently traded, my trading turnover is less than 10%, then I have to take a registered values valuation. If any of the adjustments is needed to be made in case of infrequently traded shares, then again a registered values valuation is required. Now, most important of all these parameters is if there is a change in control, or if the allotment being made is more than 5% on fully diluted basis to any particular allottee or a group of allottees, then also a valuation is needed to be obtained. This 5% is to be checked very carefully. It is not the same percentage as given under the takeover regulations. So one has to check this percentage very carefully. Registered valuer has been defined as defined in the Companies Act. There are certain transactions which are out of the purview of Chapter 5 of ICDR. Conversion of a loan or an option attached to a convertible debt instruments. Any allotment being made pursuant to a scheme approved by the tribunal or high court, except the pricing norms. Preferential allotment under a resolution plan. Bifur is no more there under a resolution plan. Lock-in provisions are still applicable. QIP placements being done, which is totally governed by Chapter 6 of ICDR. There are separate provisions altogether for that. Pricing and lock-in norms are not applicable for preferential allotments being made pursuant to recovery of debts under the SARFAESI Act. And in case the allotment, the provisions relating to EGM notice disclosures are not applicable if an exemption has been obtained under Regulation 11 of SEBI Takeover Regulations. Likewise, if the allotment is being made to a mutual fund or an insurance company or a commercial bank or a financial institution, the provisions relating to UBO, ultimate beneficial owners' names to be given in the notice are not applicable. Likewise, sale during last 90 trading days is not applicable. And also lock-in on the pre-pref holding provisions are not applicable. This is a very unique kind of a case wherein a preferential allotment plus an open offer is being made, wherein an open offer is being triggered pursuant to a preferential allotment. So when do we have to make the allotment? So if an open offer under takeover regulations is being triggered, there would be two situations wherein a competing offer has been made by anybody, or wherein there is no competing offer by anybody and it is plainly only the allottee who's giving the open offer. So in case of competing offer, the allotment is to be made within 15 days from the expiry of the offer period. And in case there is no competing offer, 15 days from the expiry of 15 working days or detailed public DPS or receipt of all the statutory approvals, whichever is later. This is the important provision. A very important, a very distinct route being followed these days is share swap. That is preferential issue for consideration other than cash. One important provision to be kept in mind, very important, because many times companies come to us, can I do this for my building? Promoters have a building and they want to issue their own shares for acquisition of that building. Answer is a clear no. Ever since 2022, I guess, has been totally prohibited. Now the consideration other than cash can only with regard to share swap, wherein shares of a particular company are being acquired and you are issuing your own shares to it. Few of the modalities, rest all remains the same, but few of the additional modalities which are needed to be complied with are, we have to do a valuation of the target entity by a registered valuer. A swap ratio is determined wherein it is determined that as against one share of that target company, 2 shares of my company will be issued depending upon the valuations. Then a share swap agreement must be there to clearly outline the terms and the modalities. This provision is exempt from the provisions of RPT, and the target company's shares are transferred in the off-market mode. These are certain important points because this is a new way of preferential allotment being undertaken these days. So I thought it's important to cover it in my slides. Takeover regulations, a complicated set of regulations, but has to be kept in mind thoroughly while deciding upon the preferential issues. There are 3 levels of deciding. Number 1, regulation 3, triggering of open offer. Number 4, control. And number 20, regulation 29 talks about the disclosures. The creeping acquisition limit, as I said earlier, is 5% in a financial year. This is applicable if the shares that are held by the person or group of people is more than 25 but less than 75. Initial triggering limit is 25% or more of the voting rights. And both these limits have to be checked on individual as well as aggregate basis. We have seen many cases wherein these limits were not checked properly and a fundraising action has led to a outflow of money action wherein either an open offer has to be given or one has to go to SEBI for settlement or open offer things. So these limits have to be checked very thoroughly. Disclosures under the takeover regulations under 29(1) on acquiring 5% or more of the voting rights. Even if I'm a non-promoter allottee and I'm getting more than 5% shares or voting rights, I have to make this disclosure. Nothing to do with I'm a promoter or non-promoter. Then change in shareholding. Once my holding becomes more than 5%, any change of more than 2%, even if it's an increase or a decrease, I have to disclose the same to the stock exchanges within a period of 2 trading days. Now, this is a brief glimpse of wherever, under whatever laws, the takeover regulation, the preferential allotment of private placements are appearing. Section 42 of Companies Act talks about it. Section 62 of Companies Act talks about it. SEBI LODR talks about it. SEBI ICDR talks about it. Eligibility, Companies Act clearly states that not more than 200 investors in a year can be the allottees. Otherwise, you will trigger the public issue norms. You will have to come out with a public issue. ICDRs mandates that there should not be any sale during preceding 90 days to be a eligible company or to be a eligible allottee. Then Companies Act talks about securities. 42 talks about securities. 62 talks about shares or other securities. LODR talks about specified securities, which definition has been borrowed from ICDR. ICDR again talks about specified securities. Shareholders approval, clearly everywhere it's a SR. LODR is silent about it, but otherwise 42, 62, ICDR, they all talk about a SR. Offer document under the Companies Act needed to be shared, which of course even is applicable for listed companies as well. Offer document is needed to be given. Consideration 42 talks about only the banking channels, no cash transaction, and the money has to come only from the allottee's bank account. It's not that if I'm the allottee, any other relative of mine can make the payment. That is not permissible. 62 says through banking channels or consideration other than cash, and LODR says banking channels or consideration other than cash, which I discussed with regard to the share swap. Disclosure document, offer document has to be there. 62 talks about the general meeting notice disclosures. ICDR also talks about the general meeting notice disclosures. Pricing 42 is silent. 62 talks about unlisted companies by registered value. And ICDR talks about, depending upon the frequency or infrequently traded shares, it can be either the chartered accountant certificate or registered values valuation. Valuation report 42 not required, 62 yes required for a listed for an unlisted company, and ICDR talks about independent register values valuation. Allotment period under the Companies Act. Now, this is a very interesting fact, which again many a times is discussed with us, कि Companies Act तो मुझे 60 days बोलता है, RBI में शायद 180 days का भी पीरियड फ्रेम है, बट लिस्ट आप ICDR में बोलते हो कि 15 days में मुझे अलॉटमेंट करनी है. सो फॉर एनी the stricter provision has to prevail. 15 days from the shareholders approval is the mandated timeline for a listed entity. If you're not able to do this allotment within this 15 days period, you will have to restart the process again from day one. You'll have to take fresh shareholders approval, including fresh relevant date fixation and everything. Listing application as per LODR is needed to be filed within 20 days of the allotment. One very important requirement under the SEBI LODR regulations is statement of deviations or variations which are needed to be filed with the stock exchanges in case the funds are not utilized for the purpose for which we have taken the said money. So then you have to file a statement of variation with the stock exchanges on a quarterly basis along with the results within 45 days of the end of the quarter or 60 days of the end of the financial year until the funds are fully utilized for the purpose for which it has been raised. Along with this, a very important requirement which has come, which is important from the SME company's perspective, is that in case SME company presently or till about 2 months back was not permissible to crossed the threshold of 25 crore paid up capital. But now SEBI has allowed that you can cross the 25 crore threshold by way of a preferential issue or a rights issue or QIP, but you will be required, and you can remain on the SME exchange, but you will have to do all the compliances as applicable to a main board company. So this is a big relaxation for all the SME companies, that they can come out with the preferential allotments simultaneously. But yes, they'll have to do the compliances as applicable to a main board company. So these were the broad nitty-gritties pertaining to a preferential issue. Hope they will be of help in your future fundraising actions. Thank you so much.
Thank you very much, Anjali. Thank you for giving a detailed overview so everybody can understand and they can give answer. They can ask questions also. Now, Lokesh and Deepti. So I will request Lokesh that Anjali has explained that what are the law, how it can take place. So can you guide us certain things, that what stock exchange is facing problem, what stock exchange want to give advice, because this is a two-way channel. If you tell in advance that these are the shortcomings when you are filing, these are the shortcomings in your process, these are the shortcomings you are planning for this finalization, so you can suggest. So Lokesh, you can give, then Deepti take over. If Lokesh is not in the meeting, then Deepti, you can start. Any
Good evening, everyone. First of all, I would like to thank Corporate Professional for inviting us on the webinar. Lokesh is a bit busy. He will join in a minute.
you can
So
start.
Anjali
You
has
can.
already discussed all the procedural part in detail. Am I audible?
Yes, yes, you are audible. Yeah, Deepti, you are audible. Carry on.
Deepti, you're audible.
Deepti, you are audible. You can carry on. Yeah, go ahead.
Good evening, everyone.
Good evening.
Am I audible?
Yes, yes.
Yeah.
Yeah. So first of all, I would like to thank Corporate Professional for inviting us on a webinar. So today we are going to discuss major observations or queries which are raised by the exchange while processing the application. So we will start with the notice. Regulation 163 of ICDR speak about the mandatory disclosure that has to be made in the notice, which includes object of the issue. But exchange has observed that the object of issue is not properly defined. It is open-ended. It is vague. 2 or 3 objects are clubbed together, and only one amount is allocated towards that object. So it is very difficult for the exchange to analyze the intent of the object. So exchange has already issued one guidance note for that on December 13, 2022. So companies are requested to refer that guidance note, in which we have specifically mentioned that company has to specify exactly object for which they are intend to issue the refunds. Clearly, it should not be open-ended, and the amount should be properly mentioned in each object. Then we will move to the intent of the promoter. So in the intent of the promoter, it has been observed that the name of all the promoter directors are not mentioned along with the key managerial persons. So companies are requested to give all these details proactively. The next important point in the notice is shareholding pattern. So shareholding pattern should be given on pre and post preferential issue. But it has been observed that the post preferential issue is given not on the fully diluted basis, for which we have to raise query again and again. Then next very important point is identification of ultimate beneficial owner. So SEBI has issued circular dated January 24, 2013, according to which other than natural person, ultimate beneficial owner has to be identified according to that certificate, that circular. They are HUF, partnership firm, LLP, all have to disclose the UBO. There are certain exceptions have been provided for that, like mutual funds, mutual fund, scheduled commercial bank, insurance company, that have been given exemption. In case the company are not able to identify any of the UBO, then they can give senior manager official as a UBO. Then the next important point is in notice is interim use of the proceeds. We have observed continuously that the interim use of the proceeds have not been included in the notice. It is very important disclosure, and company cannot use the fund for the purpose for the other than purpose of object in the capital eroding instrument. They can then they can keep that in the FD, government security, or money market mutual fund. Other than this, they cannot keep the fund. So these were the major observation we have made while we were reviewing the notice. So one should keep all these things in mind when they are drafting the notice of preferential issue. After this, there is the one major non-compliance is observed is lock-in. So we have observed in one or another application, lock-in non-compliance is there, because due to this, exchange recently has given general advisory to all the companies. So Anjali has already explained you what is a pre-preferential lock-in requirement and what is a post application for which equity are allotted, lock-in is required. But exchange has observed that there are delay in lock-in, pre-preferential lock-in holding. Companies are not keeping the shares in lock-in, and in between they are selling out shares. So this create lock-in shortfall. So companies has to keep this in mind, and they have to sensitize allottees also. Further, the company has to inform all the allottee that the share purchase in between relevant date and allotment of specified security shall also form part of the pre-preferential allotment and will be part of the will be subject to the lock-in. Further, they have to inform and take undertaking from the allottee that there will for no intraday trade in their pre-preferential allotment shareholding during the period between 11 date and the 90 trading days from the date of allotment or trading approval, as the case may be. So the companies are requested to ensure these compliances because they are now happening very frequently, and exchange as well as regulatory are reviewing this seriously. After this, major queries are raised in the valuation report. So Anjali has already explained you when the valuation report is required. In the infrequently traded shares, if AOA of the company specify that if there is a change of control, if there is an issue of consideration other than cash. So in when company take valuation report, valuer has to consider all the three approaches, that is cost approach, market approach, and income approach. But we have observed that valuer is not giving proper weightage to all the method, or he is not opting all the methods, and justification also have not been provided properly. For example, if valuer is taking if valuer is not taking DCF method, the information is merely provided that it is price sensitive information, which is not acceptable. The company and the valuer has to give proper justification for each of the method which they are not taking. Further, it has been observed in DCF future transactions, future performance of the companies are very high, unrealistic basis, and the past performance is not aligned with that. So company has to make sure and give the proper justification for this deviation. And in case the company is taking comparable company, the company has to provide the rationale for considering the particular company as a comparable company. Now, another important point is when there is a change in control, the company the company and the valuer has to consider the control premium, and valuer has to give treatment of that in their work in the working of valuation report. Now we will move to the another important point, that is the transaction statement. So when companies are submitting transaction statement to the company to the exchanges, they are not submitting entire document, entire transaction statement, and it is not reflecting the lock-in start date and end date. Because of this, we have to raise queries again and again. So lock-in start date should be, in case of in-principle approval, prior to 90 trading days from the relevant date. And in case of the post allotment, it should be from the relevant date up to the allotment of the specified securities. So these are the important points the company has to keep in mind when they are preparing for the preferential issue. Recently, exchanges have also issued a FAQs which are self-explanatory. If company refer that, there will be very less queries from them raised by the exchanges towards them, and there will be faster processing of the application. So this was from my side. Thank you.
Thank you very much. Thank you very much. You have given correct issues which stock exchanges are observing, and if company follow this, then the process of approval will be faster. Is Lokesh is available there? He has come from the meeting. Okay, till the time Lokesh comes.
I'm there. I'm there.
Yeah, Lokesh, please.
I missed what you said. Sorry, I missed.
I was just saying that Deepti has mentioned that what is stock exchange, but you can add some advice to the corporate world. So when they file and then they plan, they all plan like object clause you have mentioned, the process, right pricing, lock-in. These are certain mistakes they do. So if you can advise them, that will be great for them.
So I think Dipti and Anjali has already covered whatever the points which are there. So what we are additionally doing, that we are closely working with SEBI on certain preferential amendments. Just to give you an example, like currently preferential lock-in talk about trading approval. At the date of allotment, you don't know when the trading approval happen because that's an operational procedure. So we are closely working with that. If we can do a date of allotment as a lock-in rather than doing a trading approval. Similarly, a lot of data that we are asking from the LOTs, like transaction statement, all these statement, remit, lock-in, and can we get directly from depository? Yes, all these data are already available with the MIs. Why to go with the corporate and corporate to then in LOTs and LOTs to they get the data from NSDL, CDCL, and again that format is not there. So what we exchange, what we have done in the last 2 years, we have seen what is the time period when the board meeting till final listing happen. So there are many instances where the approval, what we have seen average is more than 150 days in main board, and SME it's more than 180 days. I'm talking about only for equity. So why the delay happened? We have gone there. The main reason of delay was that lot of to and fro in SME, main board and SME. The difference between main board and SME, usually what we have seen in SME, lot of public investor with they are allotting 10 shares, 20 shares, 50 shares. Also, there is no minimum requirement, but ideally the preferential share regulation talk about maximum 200 LOTs. But the intent of the regulation is that you can certain set of investor, not 1 and 2 or 10 or 20 shares, because then what is the use? Because there is already a market which you can buy and sell. You are allotting certain set of investors. So there are a lot of things are happening. Okay, once the post allotment application come to exchange, if any LOT has done a transaction that is from relevant date to allotment date, the sale, which is a non-compliance, entire application go on hold. So what all these things proposal that we are discussing, can we eliminate? Can we put some restriction on minimum number of application, minimum amount of application, so that quality comes? And if any LOT is sold, can we stop selling at LOT? Can we stop, just like in PIT, trading window closure is there, where a company upload their KMP PAN number? Can similar thing can be applicable? So all these proposals we are working. So we would be happy if you can also share us what are the challenges. And in fact, all your people who are listening, if they can also share us the challenges, we can definitely work with SEBI and we can get the amendment. The idea is to ease the things. That one we can work on.
Lokesh, it's a very nice move because there is a need of ease of doing business is going on, because when preferential allotment is the speed. Because when I started my presentation, I told this is a Swiss knife. So it should be faster and it should act in a different manner. So the point you are saying, if you are following law, then you should not wait for listing approval and then going for the listing. And I think stock exchange is taking right decision. It will churn around. You have just see in this particular year, the number of issues in very few months, it is going up. And I think this will today, this particular year, it will cross the maximum number of preferential issue and the maximum amount of preferential issue. And if you put the simplification, then it will helpful to you. There is
just to give you update, we were just pulling the data. What is the preferential application on average we receive in a month? So last 3 months, we would be receiving around 50 to 60 applications. I'm talking about both pre and post allotment. I'm talking about pre-allotment, that is 28-1 approval, and post-allotment approval. This month, that is, I'm talking about June month, which we have pulled the data, it's 80 plus applications that we have received. So the trend is to opposite, showing that the things, what you are saying, it's coming a picture that last 3-4 months, application was coming 50-80, now it's coming 80. If you talk about 6 months back or 1 year back, it was 40 and 50 application in a month it was coming. So things have totally changed.
And Lokesh, there is a discussion going on in the industry circle, because I am the part of the industry standard forum. We are talking about that there are so many approvals are going on since ages without realizing the importance, without realizing the relevancy, and without realizing the purpose which is there. Just because, say example, shareholders approval. Now, in so many cases, even for dividend, even for QIP placement, even for other thing, even for changing authorized capital, you require shareholders approval. So, and all these things are in a normal procedural part. Nobody is objecting, nobody is doing, it's a harmless thing.
Yes.
So there is a question, there's an issue going on that why is required, why not we can discontinue this and the board can decide and you can increase this. So what you are suggesting is another aspects which is adding more value to do faster. Today, business name is fast. If you churn around fast, you can do better and you can create. Thank you very much, Lokesh, for giving this information. Now you have asked this question that what are the other suggestions? So I'm going to the Mr. Sanjay Jain. He is a very thorough professional at the Wizard and Financial Wizard, and he is working in so many multiple companies, multiple advice he has given, and he's talking to various front also. I just want to listen, Sanjay ji, because now the regulator is sitting before you, they can communicate to SEBI and change it. What is your call on preferential issue? What regulatory changes should be again start, or what Lokesh has said? Other than this, you want that these changes should take place so it will be more ease of doing business. Over to you, Sanjay ji.
Thank you, Pavanji, for this very good introduction on me. So thanks so much for that. I must say it has been very educative for me to listen to Anjali with a very comprehensive presentation on preferential issues, and then compliments to corporate professionals of keep doing this job very consistently in terms of updating the community on the latest changes which are happening. I think you do a fantastic job, and you're probably becoming a default encyclopedia for us, that whenever we need to check something, we'll try and search on Google the corporate professionals presentation on the latest one on the topic, and we do get access to it. So extremely good job done. Deepti made some very pointed clarifications. I think that was very informative. I must concede that corporate finance professionals, the normal course, are not really aware of the clarification which Deepti ji provided, and I think it will be good if you guys can make a note of minutes of this meeting and probably circulate it also, because then I think a lot of industry people will lot of questions which come, they will get clear. It's almost like a FAQs which he upfronted. Just so I think that's fantastic. And Lokesh ji, of course, talked about the close coordination with SEBI that is happening, and some of the amendments that they're working upon, and which I think is very, very important. So since my co-panelists here are from the National Stock Exchange and corporate professional works very closely with all of them, I really have few points, and because a lot of points have been covered, basically to kind of give some pointers for some procedural improvement, and probably some incremental suggestions that they can, if they think they hold merit, they can probably include it in the discussion with SEBI. I do not wish to fundamentally alter the guidelines. They are as they are. And the work always this is like a continuous work in terms of improvement, etc. So I'll start with some of the points. So Lokesh ji, of course, discussed about the timing aspect of the preferential issue. I think that's very, very important, because preferential issue again is a very important tool for corporate finance practitioners, because but time is so much of an essence. My experience has been, while we talk about a limited time frame quickly to be done, etc. Practically speaking, while the board and the management itself takes time to finalize the terms of the preferential issue valuation, and getting interest of the investors, etc. That itself is a time that internally gets consumed. After that, once we convene the board meeting, my sense is this, practically speaking, I'm really talking practically, we are looking at like 5 odd days really, or a week goes before the board meeting to happen. Then there is 30-35 days, when you really are able to finally conclude the shareholders meeting, and after that, you've seen that the in principle approval itself, it is not coming on time. It's kind of taking 10-15 days after that, after the shareholders meeting has happened. And then we have to convene the allotment committee meeting, which is a maximum 15 days from that. And then the final trading approval itself has been taking a lot of time. So all I'm saying is this, that practically speaking, if as a corporate finance professionals, I would like to guide my management and my stakeholders that please provide for at least 5 to 6 months for this entire process. Now the point is this, that that's half a year gone, really. So I think we really need to see how we can procedurally improve this. And I'm so happy to know that Lokesh ji is already, touched upon this subject, and they are talking about, the lock-in periods starting from date of allotment and not from the date of trading approval, because that does get delayed to a lot of extent. So I think that's one point which I had. Another point which and this is a suggestion really. First of all, I must compliment SEBI and to come out with this fantastic right issue guidelines. I think this has really made life very easy for corporates, as Pavanji, you yourself are involved in so many exercises in terms of guiding the corporates on this right issue. I am finding that we are able to complete this process now in like good 30-35 days, 40 days kind of a thing, which is fantastic. And the innovation which have been brought in terms of allowing the promoters to upfront renounce in favor of third parties, etc. There are no lock-in requirements, and also so extremely well timed, and it's turning out to be very useful. I would like to just raise one point here. Is this that we have also been trying to look at our innovation here in terms of having a simultaneous rights and a preferential issue, because that is something, why there is a need for that. It comes specifically relevant when there is a M&A transaction in which consideration is a mix of cash and share swap. So share swaps share swaps have been allowed only for equity shares, very clearly, for consideration other than cash. Nothing other than shares are being allowed. So that part gets taken care of the share, through preferential allotment for consideration other than cash. But because the counterparty, wants cash also, which is integral part of the transaction, the shareholders of the company need to provide that cash. And for that rights issue, because you do go to the existing shareholders who provide that packet of the amount of cash which has to be required, and because otherwise the closure of the transaction in fullest sense doesn't happen. Because if we have to do rights first, then we do not know when, that after that there's no certainty about the share swap, etc., because that gets delayed. So if we can simultaneously consider that, and if there are any challenges, etc., I have been trying to look at and research these topics. I think it can be done, because right issue now can get completed in like 40 days old, whereas preferential issue, by the nature of the process that we have, it can take 60 to 90 days. So even the pre and post shareholding pattern on preferential basis, can absorb a rights issue which happened in between, etc. So I think it is something that can be reflected upon. It will aid the corporate finance professionals very well, and will facilitate a lot of M&A transactions. So this is just a suggestion, and of course, there could be some problems in this, which I think we need to openly reflect and see how can we build safeguards if there are any problems in this. That was one point which was there. Another point, which I wish to raise here is regarding lock-ins. Now, of course, we all know what the guidelines on lock-ins are in preferential issues on pre and post. But what is really happening? I mean, let's look at it. Today, the promoters, KMP, and the insiders, are already restricted, for most of the year because of the quiet period, because we have quarterly results coming in, and we do know that, companies on an average take like 40-45 days to come out with their results, So in a way, I would say that out of 360 days, you are locked out, for not doing anything for a major part of the year in any case, And on top of that, if you have, lock-ins which range from 90 trading days, and 90 trading days really means kind of 150 odd days if you look at it really in total sense, or say 120 days or 130 days. And then sometimes it is like, 90 trading days, and for promoters, it extends to 18 months also, on a post-preferential basis. So what really would happen is this, that promoters are in a way totally locked out in terms of, doing things, etc. And a lot of investors also, when they see that after trading approval, they have to have another 6 months of lock-in, etc. So from the date, look at it from a corporate point of view. They probably discussed a transaction with somebody. That transaction itself takes like, 3 months, 6 months to conclude. After that, the shareholders agreement, transaction agreement come. And then we have to execute it, etc. That execution, and then the guy finally being able to liquidate his shares, etc. There's a long time period. And sometimes that impedes, the lack of liquidity impedes, the whole transaction itself. And I'm sure that's not the intent of the regulator also. So if there is something that can be done to address, these things, it will be good. I would also like to raise in the same vein one point regarding warrants. While the lock-in period in warrants, when you convert the warrants, are allow you 18 months life, 18 months before you can convert it into shares actually. But the lock-in period actually applies on warrant on the converted shares after you have excised the warrant. So suppose if I have got warrants and I can exercise these warrants over 12 to 18 months, I would still have to get I would still be under additional, lock-in period post the warrants. We had tried to raise this point earlier with merchant bankers, and they said that convertible instruments other than warrants do not have to repeat this lock-in. But in case of warrants, this lock-in is still to be done, Now, this is really elongating, everything. So I think that's something that if it can be addressed, it will be useful. Then last point, I would just like to say one thing. In the last, I think 22 amendment to the preferential issue guidelines, for good reasons, SEBI restricted swap of shares, limited only for consideration other than cash, was only limited to shares. Everything else was stopped, and because there were no safeguards or anything like that. But I would say, since 22, another 3 years have elapsed. Uh, can we look at some, relief here, where probably slum sales can be allowed or something? Because sometimes what the business which you are buying is not in a corporate entity. It is sometimes in a LLP or in something else, etc. So there, it becomes problematic to structure it through preferential issue as a consideration other than cash. If that can be done, of course, with safeguards that are required, etc., I think that would be good. And because proprietorships, there are a lot of businesses in proprietorships in LLPs and etc. So those are also coming as part of the normal, M&A transactions. So I think these were some of the points which I had, but I would like to say that there is definitely an improvement and a constant relaxation and liberalization that we are seeing. Rights issue, as I said, was a great example process. So, so I would like to compliment everybody that they're doing their job and making this ease of business happening, as Pavanji mentioned. So I'll just close with these comments. I don't have anything immediately to say.
Thank you very much, Sanjay ji. Very nice summarization. And Lokesh, you unmute yourself, please. So Lokesh, you can give Sanjay ji's suggestion, because that suggestion is part of other people's question also. So
Yes.
you can respond to that.
Yeah, so couple of suggestions that, in fact, definitely we have noted down. It's like simultaneously right issue and preferential issue, but there are certain challenges because as an exchange we have a concept of sequencing listing. So maybe that would be more on technical part. We will be working on this, and definitely we will take care. Slum sale also will also take it. Sir, one part that you talk about warrant additional lock-in, but for warrant you are paying only 25%, sir. For other convertible security and equity, you are paying upfront full payment. So that's the whole concept. Ke buying 25%, you are locking the price today and remaining 75%. That's the game. That's why the SEBI is very keen. Ke they don't want for warrant. That's the whole objective. But other definitely will definitely.
And Sanjay ji, worldwide, this 18 months is only in India. That is the best part. And we should realize this part. The way market is going up, 18 months, you are freezing today. You have to pay some penalty. You are paying 25%, number one. You are freezing the thing. And in case, suppose the price is going down, you have some liability, but that sometimes financial liability is more than the small penalty. So people follow this. You may be ineligible for further allotment, but you have this right also. So a warrant, there is a proxy advisory firm is always raising this issue. This warrant concept should be avoided, should be closed. It should not be allowed. So that is one part. And one more thing I will tell you. I was just studying the international scenario. So international scenario, everybody is thinking this is a something which is good arbitrage on the legal basis, that people follow this. That's why SEBI has come out that if you have even sale single share, you are not eligible, even the group also. So when you are doing this, you follow them. So thank you very much, Sanjay ji, for giving. And I think SEBI and stock exchange all are working in one direction, that how we can remove all these clutches. Now, Lokesh, Deepti and Anjali, there are 35 questions I have, 16 just now. It is indicative. Though we are saying this law is very clear, it is simplified, FAQ is there, even people have a question. So, Lokesh, we will compile it and send it to you, but let's hear from people's side what they want to say.
please enlighten us whether a private limited company can make a preferential issue of unsecured optimal no doubt this question, Kailash, is connected to not today's topic. I will give you answer separately because we are talking about the listed company. So we'll send you a separate reply. Shivam, please send him separate reply. Yeah.
But I think I've read this query, so it can be done to a company without being triggering the deposit rules. It can be done to a company.
Okay.
But still, we'll forward the formal. We'll accordingly look at it.
Can a listed company issue redeemable preference shares on a preferential basis to promoter and promoter group?
It won't fall within the ambit of ICDR regulations. It will have to be done as per the NCS regulations, non-convertible securities listed.
Lokesh, you have any view?
No, I think same Anjali has already covered.
Okay. Nitty, whenever you think you have to give answer, you can just rope in. Warrant can be issued under which section of the Companies Act?
But under the definition of securities only, it is being covered.
Okay. One of my CS friend was working in CS and a renowned listed company. 1-2 years back, it was facilities severe cash flow related issue. His office premises were raided by GST office just before company was preparing preferential issue. MD told CS not to disclose about the raid of GST or else investor would have been turned around. They will run away. Issue were completed and just before second preferential issue, he resigned as CS and joined another company. Whether later on it is discovered the company did not make disclosure as per regulation 3030B just before the raising fund before the market, what would be the responsibility on the board and CS and company? Please guide. There is no need of guidance. It is a complete responsibility of the company. And if the SEBI is understanding and stock exchange is seeing this, because if you can give this information to the market, there is a possibility investor could have they could have avoided this issue. So the CS as well as the company both are responsible and both are guilty in this. SEBI can take any action. They can debar you also for future other than the monetary penalty, and they can instruct you also refund the money to the people. Am I right, Lokesh?
Yes.
Okay. In case of allotment of the other than promoter, whether entire public holding will be locked in or only LOT holding will be locked in?
Only the LOT is holding. If we are talking about public LOT, only that person's allotment, pre-pref holding will be locked in.
Okay. If the promoter and promoter group holding is say 10%, then till next 14.99, no creeping acquisition rule will apply and company can issue 14.99 shares to promoter and promoter group within same year also. Am I right?
He's talking about promoter and promoter group is holding 10%. Yeah, first trigger is 24.9. 24.9. Yeah.
Okay. Okay. Acha, well, is there any cooling off period required to make preferential issue if the company has raised fund previously? Suppose I raise one issue today and tomorrow I want to
There is
start.
no cooling off period required. Only thing is that the earlier share which they have done should be listed on the exchange.
Okay. So the cooling period is that all the shares which you have come out is will completely listed on the stock exchange, then you can break down.
Yes.
But can I do some exercise earlier to passing resolution, passing this?
That you can do it.
Yeah. Okay.
But sir, that won't help. Lokesh, I guess because we have to file the listing application. Sorry, in principle application immediately on the day of dispatch.
So what he's saying, at least notice part simultaneously allotment listing has not happened. Notice part they can, as a company, we talk about a company. Company can send a notice to shareholder. Simultaneously they can apply to the exchange. Exchange will give approval only the listing happen. Because
Right.
So you are saving time, Anjali. That's all.
Yeah.
Is in principle approval required for allotment of the resolution applicant pursuant to approval of resolution plan?
Yes, it's required.
Okay. This question is to Lokesh and Anjali and Deepti. A CRIP
preferred company and 95 promoter holding, can the company make a preferential offer to non-promoter to bring the public holding to 25%?
CIRP you're talking about?
Yes, yeah, pick.
No. For complying with MPS norms, only 5-6 methods have been prescribed by SEBI, and preferential is not one of them.
Okay. Lokesh, koi any rasta?
Preferential is not the method for MPS compliances.
Okay.
Lokesh, can the company make an exemption application to SEBI? If with
But SEBI will not be giving.
not
In past,
giving.
we have
Okay.
discussed with SEBI. SEBI is not
Okay.
giving. The idea is that they want to do a preferential, do a OFS, do a QIP.
Right. Okay.
If the LOT is a fund house, a trust, wherein there is no UBO, how to mention the same in the explanatory statement?
So I
Yeah,
have already covered this part. So company has to follow, like in case of the mutual fund, they are exempted as per the circular. But in case of the trust, the trustee company has to identify the trustees. If in case they are not able to identify any of them, then the senior managerial person will be considered as a UBO. The company can refer the circular.
Okay. Okay. In case of right issue, as per the recent SEBI guideline, shares can be offered to specific investor. In such a case, there are many compliance of Chapter 5, say lock-in pricing need to be complied with. Anjali?
No. As per the SEBI recent circular, nothing is needed to be complied with. Rights issue regulations have to be complied to the fullest.
Okay.
Preferential doesn't come into picture in that case.
Okay. Is there a restriction in making right issue and preferential issue simultaneously?
So Sanjay ji ki bhi yahi question tha.
Yeah. There is no restriction. The only thing is that the sequential listing concept is there. So that's why first sequence should be listed and then on the approval process should be done.
Okay. Lokesh, there is a one section 62 of Companies Act for conversion of loan into equity. Prior shareholder approval is necessary for ICDR provision are not applicable on the same. What if the company may take shareholder approval today for obtaining a loan with the clause of conversion of loan into equity shares and make the conversion after say 6 to 12 months? Whether the provisions of ICDR would be applicable on such conversion?
I think he's talking about 62(3) of Companies
In
Act.
Chapter 5, Regulation 158 speaks about the exemption where is provided when if it is one of the thing is conversion of loan, then the scheme and QIP. But in case of conversion of loan, if the company at the time of taking loan, if they have in the resolution they have mentioned that afterwards they will convert the loan into equity, in that case only the regulations will not applicable. But then also in any of the case the company has to come to the exchange for the 28(1) approval because they have to raise fund listed and issued capital.
Okay. Okay. If company is suspended at BSC, can it make a preferential allotment? BSC or NSC, whatever.
Oh, sorry, we missed your question.
No, there are two things. One is the company is suspended at both the stock exchange.
So suspension happened on both the actions simultaneously. It can't be that one action suspended, other action active will be there. So suspension happens. And suspended company, we don't give approval.
Okay. Okay. If a company wants to change its object for which the fund being raised under a preferential allotment post getting all the required approval, can they do so? If yes, whether the special resolution required to be passed for change in object clause?
Sir, otherwise, law doesn't provide anything like this. But to shareholders' approval, say company can do it. Regulatory approval also law is not providing. It's not providing for exchanges and listing approval for any change in object. Lokesh, you can correct me if you have any
Shareholder
other
approval is
view.
required. We agree with you. What you're saying,
No, you are right.
Shareholder approval is required.
Yeah. For change in object, this is the company's prerogative and shareholders' prerogative. You want to do something, you go to the shareholder will approve or reject, whatever it is. And stock exchange will see only that you are raising fund, whether it is in your object or not, that they will see. So So the memorandum, an article is a constitution of the company. Stock exchange will see whether you are following your constitution properly or not. That's all. Stock exchange is not bother and suggest you what changes you can bring. If you are bringing out the purpose of the object, purpose of the issue is different and object is different, they can raise objection. So your umbrella is your memorandum and your object. If period of listing is less than 90 days, then
I think ICD is clearly about 45. We have to recalculate the price.
Right.
Recompute the price.
okay. For warrant issue, creeping limit 5% per year. So 18 months, 2 financial year, we can keep 10% limit of promoters.
Conversion can happen only in 5%. Otherwise, it will trigger open offer.
Okay. But open offer will trigger if my holding is more than 25%. Na?
Right.
So suppose this creeping acquisition promoter is doing, then it is okay. Perfect.
Yeah.
Please suggest allotment date of equity share for private companies, preferential allotment. I think this is not Mr. Joshi. This is today we are talking about the listed company. So if your question is allotment date of equity share for private companies, preferential allotment, and also suggest relevant date for private companies, preferential allotment. Anjali, this is
There is no concept of relevant date in case of unlisted companies. It has to be done on as near as possible to the date of allotment.
Okay. DSCP, Ms. Anjali made a wonderful presentation, very crisp, good. Then what about the role of audit committee? Review in the above as audit committee involvement includes review the terms of the issue, ensuring compliance with the applicable laws and regulation, including SEBI guideline and overseeing the disclosure procedure. This probably was not covered, maybe not mandatory, just my view. So he has given his view. So what is your call on this?
Sir, I think he wants to understand from the perspective of related party transactions. So as per the provisions of Companies Act as well as the LODR, RPT is exempt for a preferential issue. So that is why the audit committee's approval, etc., are not coming into picture. But of course, audit committee role is there to ensure compliance. LODR mandates that those things have to be undertaken.
Okay. Lokesh, please suggest FAQ date issued by Stock Exchange. Stock Exchange has issued any FAQ?
So we have recently issued updated FAQ where we also usually do a webinars. So whatever the questions come, we try to add the questions in the FAQ, and it's there on our website under the checklist.
So we today also whatever questions have come, we will compile it and give it to you, which are and give answers. So wherever questions are not there, you can put it there. Okay.
And what additionally we'll do, we'll also share you a link which is there on the website. You can also share with all the participants so that people would be aware where exchange checklist is there.
Okay. Very good. Okay. What is the average time taken for entire end-to-end preferential issue, Lokesh?
So we have recently done analysis of FY23, FY24, and FY25. Recent year, 150 days from, I'm talking about board meeting, board approval from preferential till final listing.
Okay.
Main board, SME 180 days. There would be some cases where it would be non-compliant. There some cases would be fast. On an average, it's taking 150 to 180 days, which is very high. We also understand this. We are working on how to reduce these days.
Sir, otherwise, Lokesh, honestly, it's a process of not more than 90 days. Honestly.
Agree. So the major true and fro, what I'm talking about, because
yes,
we have gone
I agree. We
transaction
are
statement that we are currently
yes.
taking from the investor company is taking from investor, and it's a lot of true and fro happening.
Yes.
These entire data can become from MI, and it entire 50% of process can be reduced. Timeline 50% of process can be reduced.
Okay. Person ineligible for allotment, there's a topic. Can we change an allottee during the pendency of in-principle approval with the stock exchange? Lokesh and Deepti.
So it is not advisable to change the allottee when the in principle approval, because you have already decided and approval is everything has gone. So it is not advisable to change the LOD.
Okay.
But
Can
Deepti, legally, I mean, because ये वाला question हमारे पास भी बहुत regularly आता है that for whatever reasons person A is not wanting to subscribe, even though he gave his consent earlier. Now they want to replace the name from A to B.
We
So
would
is
suggest
this-
not, it's not possible. The idea is that once the company board approve, then the process is shareholder approval. Simultaneously, they apply to the exchange. As an exchange, we do a lot of due diligence whether the investor has done any trade transaction or not. If the LOT is done some transaction, automatically as per regulation, he is not eligible. So post exchange approval, if you are adding LOT, is something which shareholder has not approved. Technically, board has not approved, shareholder not approved. You cannot allot in the same resolution. You have to take a fresh resolution. Again, the fresh relevant date will be there.
Okay. Can we? I am the promoter of the listed company and had pledged my shares a private limited company. Recently, the lender invoked the pledge. Am I or other PG person eligible for preferential allotment? So the sale and the invoking of pledge is the same or it is different?
Sir, ICDR gives the exemption in this respect. Interstate transfer and invocation of pledge, they are exempted from this sale thing.
Lokesh, any different view or any other?
I am doubt what you're saying. I don't think exemption is there. Pledge invocation is treated as sales and transfer. That if I'm assuming pledge is done to non-promoter, it's a public.
For contra, they think that invocation is sale. Anjali, just
Yes,
check
contra.
this.
Let me cross check, sir. I'll definitely want to,
The
but
Lokesh is saying
otherwise,
this.
yes.
Yeah. Okay. What if the relevant date falls on the weekend or a holiday?
Then the prior date will be considered as a relevant date. That is, with example, we have mentioned in our FAQs also.
Okay. What about the relevant date in case of convertible security?
Sir, in case of convertible securities, there are two options available with the company. One is 30 days prior to the date of general meeting, or the other one is 30 days prior to the date when the LOT becomes eligible to exercise the conversion. So by and large, there doesn't remain a gap of more than 15-20 days, because the day I'm allotted any convertible security, I become eligible to exercise conversion. So there can be two options available, but gap doesn't remain much.
Okay. What would be the relevant if the company has issued warrant and during the 18 months period it comes out with the bonus issue? Will there be reservation on the warrant LOT?
I think
So in
Lokesh.
case the warrants are issued during the 18 months and the bonus are also issued, then it is a corporate action. It is a basic corporate action, though. So bonus will be given to the warrant holders also.
Okay.
Deepti, regulation 294, I think talks about this, but वो उसका 294(1) talks about only CCDs. But in 294(2), there is a provision that in case of warrants, it can be given. So there seems some contradiction in it.
We'll check, but the idea is
Yeah.
that because price adjustment already happened. The idea of bonus issue is the price adjustment already happened.
Right.
LOT at the date of issuing a warrant, he is committed for some price. After that, some bonus happened due to corporate action, the price adjustment happened. Definitely, he should get a reward for that. That is what we
Agreed.
believe.
Okay. What will be the lock-in of equity shares allotted pursuant to resolution plan?
Same, sir.
It's
Allot
12 months
1 year.
Okay. Can
from the
promoter
date of the
transfer?
trading approval.
Okay. Can a promoter transfer their security held by him under lock-in?
In an interstate transfer, only by way of an interstate transfer, and the lock-in will continue in the hands of the transferee.
Okay. the tenure of convertible security in 18 months, while the lock-in is only for 12 months. Does this mean that these security are transferable after the lapse of 12 months lock-in period?
So this is always a confusion. So regulation 167 talk about 1 year lock-in, and 168 talk about conversion of lock-in. So technically, if you ask, there is already an informal guidance of Paramount, which is there on SEBI website, which talk about if you have done a lock-in for convertible security for 1 year, that doesn't mean that can be transferable until those shares got converted into equity and that those shares got listed on exchange.
Okay.
Great.
The tenure, okay. Now, an allotee of warrant paid 50% upfront, but now he does not want to exercise conversion of warrant. Will the entire 50% paid to go forfeited? Yes, forfeited. Any example, Lokesh, where the SEBI has given exemption or they have refunded money? Any?
Sir, there is a not exact example, but the whole amount will be the get forfeited, because it is because the intention how much he has get as a 50%, but now as per the regulation, whatever the amount has been given, that entire amount will be get forfeited.
Okay.
And not 25%? Because
No, he
law
has
talks
given
about
50%. No. The point is, here there are two issues. One is 25% you are paying, but that person has given 50% in place of 25%.
Yeah.
So will he 50% will forfeit, or he can get 25%?
No, so there is no concept of outgoing. First thing is that there are many scenarios when the market is up. So promoter will always prefer to conversion. When the opposite direction is there, when you are getting lower price in the market, there you will see the scenario. Last 3-4 years, the market was continuously up. So you see the trend, all warrant would be converted into equity because you are getting a cheaper price. You are locking today price and 18-month conversion is happening. When the market is trend is opposite, you will definitely see the price, but there is no concept of once you made a 25% or 50% or 99%, there is no concept of refund.
Okay. An allotee, what are the consequences if the company fails to make allotment in 15 days?
fresh approval and shareholder, including, as I said in my presentation as well, fresh shareholders approval and fresh in principle approval, everything fresh.
More than that, pricing will change.
Exactly.
Okay. An allotee, what all valuation parameter does the exchange look into in case of RV cases?
What is it, sir?
So
I
all
didn't
three
get it.
approaches we have, as discussed, cost method, cost approach, income approach, and market approach, along with the weightage they have given, we look into that.
Okay. Can preferential be made to a QIB under Chapter 5 instead of Chapter 6 of ICDR?
Yes, QIBs can be the allottees in a preferential allotment.
Okay. Swap. In case of swap of shares, can issuer acquire partly paid shares of the company?
No, only fully paid up shares can be acquired.
Okay. In case of preferential through swap, and swap ratio
But
is based on...
there is no, sorry, there is no restriction on swap that the shares of the target company have to be fully paid up only.
Okay. How to confirm receipt of consideration for making allotment in case of swap?
I'm not able to understand the question very clearly, but
How to confirm receipt of consideration making allotment? The saying you are doing swap in
because we are not getting any money.
Money you got it or not?
Right. Okay. So I think when we get the signed DIS depository slips.
Okay.
I think share would be in the name of the company, issuer listed company.
Yeah.
What happens to share? Unlisted company is acquired by a listed company. They will be issuing a share. So ultimately, unlisted, all the shares will be moving in the company account.
Like you are doing swap, so maybe on the basis of asset, basis of the company, all these things are there. So they want to do this. Okay.
Yes.
Okay. Are the provision of RPT applicable in case of swap on the listed entity?
So for entire preferential issue, related party transactions are not applicable, but the target company, if it is my group company, for that entity, related party provisions would be applicable.
Okay. If the fund have been raised for setting up plant and general corporate purpose, but due to non-finalization of land deal, it is put in bank FD, will this be considered a deviation from the stated object, and deviation under regulation 32 of listing regulation will have to be filed?
Technically, yes. Reason being, you have raised an object in which you have mentioned that you are setting up a plant. Your
Okay.
plant is you have anyway. You have to give under regulation 30. You have to update. Okay, your plant is going. What is the status? If there is a delay in a project, it already covered in the regulation 30. Simultaneously, if the object was setting up plant, you are keeping the money in a FD which is lying in the bank. Definitely, it has to become a deviation.
Okay. Ease of doing business, as I mentioned, the harmonization of preferential versus right issue will also help in regard, say, unified approach. Countries like USA has more unified approach, like India's formula pricing requirement for preferential allotment. US regulation imposed no specific pricing methodology for private placement. Instead, the regulatory focus is centered on sophisticated investor participation and information disclosure. Right offers receive pricing flexibility through the enhanced disclosure requirement, then exceeding certain threshold. Any guidance on view from the expert? My view may be in a general view and general prospects.
I think already we have covered that we are already working on the process how to reduce the timeline, and all along with the whatever disclosures, limited disclosure that we are already working it.
Okay. But this person is he's suggesting one more, than US. They are focusing on sophisticated investor. Here we are allotting to anybody, and then we are focusing on pricing. So he's saying the company should get a good investor. That should be the focus, not the price.
But in our case, we have seen a normal individual investor who are getting 10 shares, 20 shares. Technically, they should not get in the preferential, what we believe, because that's not the intent of the law.
Okay. Okay. When a valuation report is needed in case of preferential issue by a listed company, when valuation report is required?
Under 3-4 situations, please, Lokesh.
Yeah.
Under 3-4 situations wherein my articles provide for a valuation, valuation report would be needed, whether you're frequently or infrequently. In case of infrequently, yes, a valuation report is needed. If there is a change in control of the allotment being made is more than 5% on fully diluted basis, to one person or a group of people, valuation would be needed.
Any view, Deepti?
Same. We have already covered this.
Okay. Sometime we received a request from non-promoter category for transfer of shares warrant to another. However, ICD are only covered within the promoter category. So I am not in the promoter category. I am in the public category, and I got the warrant, and I want to transfer to the Lokesh, who is also in the public category. Can I do this?
Currently, no, but we may discuss this option. But currently, this is not up there. Regulation.
Lokesh, suppose 18 months lock-in period and 6 months has passed, and I'm transferring to you with this condition that 12 more months will continue. So 18 months, is it not possible?
It might possible. We need to check. We have not seen this type of thing scenario.
Okay. Is any open offer trigger on preferential allotment of convertible security where no control or threshold breach arises?
On allotment, it is convertible security. There is no triggering. But at the time of conversion, we have to see the 5% limit or 25% limit.
Now, Sanjay ji, I have not asked the technical questions, but you have seen there are so many questions has come. They have come, and people are asking. So, your view, are people are still clear? I'm asking as an industry. Because Lokesh is saying we are giving FAQ, Deepthi is also saying FAQ, and then they are continuously changing. Anjali is also advising. But even then, there are so many questions. So, what is your call on this?
So I think if there could be a informal channel, with NSE or with SEBI or the regulators, for the KMPs or the designated persons from the companies, to clarify certain things before they set out to actually do the planning, it would really be helpful. Because what happens then is this, that we do some structuring, we devise certain things, etc., and we set out this board process. It becomes a public knowledge that management is trying to do this and that, and then when we get stuck, if we were to get stuck because of certain things, or maybe it's not fully compliant, or it's the information is not to the satisfaction of the exchanges, etc., a lot of considerable time has elapsed, while the company tried to do something. Because it was unable to, it can become a negative price, sensitive thing for the company also. So I think if there's an informal channel that can be created, it will be good. You can restrict it to KMPs of the companies for interaction, and maybe they can send a written request, and that then only you kind of entertain them. So that should not become a frivolous thing also, which becomes difficult for exchanges to handle. Just a suggestion.
Okay. Okay. So, friends, I think we have tried to answer more than 50 questions and 45 questions. Lokesh, some questions are common, some questions are repetitive, but some questions are important also. And these questions where people are understanding differently, it's require FAQ. It's require continuously. So we will compile it and send it to you, send it to SEBI also, that these are the some changes and some thought which Mr. Sanjay Jain has given and some of the participant has given, that we will circulate or we will pass on to the people. And friends, with the presentation which Anjali has given, we will pass on to everyone, and the FAQ we will share. As the time is, it's a time to close this. So as a ritual, I'm asking 30 to 30 seconds or 1 minute from everyone about the topic and about the issue. So what is your concluding remarks? I will start with Sanjay ji first from you.
It's a very preferential allotments are a very important tool in corporate finance for listed companies. And
Tushar,
hello, yeah,
Carry on.
I think it's a very, very important tool. Uh, and I think SEBI has been kind of liberalizing this and trying to restrict it at times to have safeguard, etc. But I think this restrictions, etc., should also have a sunset period. That it should not be forever, etc. I think I think it's a very, very contemporary, very relevant topic, and congratulations to corporate professionals to kind of have this forum and webinar to discuss it. Do keep it up. I think it's a very important tool. Yeah.
Okay, Deepthi. Okay, Anjali, till the time you.
so preferential allotments are comparatively very close to heart to corporate action for me. My journey.
So I would like to thank Corporate Professional. Actually, it was very interactive. We came to know about uh, from Anjali and others also, that what are the expect, what they are thinking. So we will incorporate all the things so it will be helpful for us also.
Okay, Anjali.
As I was saying, corporate preferential allotments are a very close to heart to corporate action for me. Ever since my journey at corporate professionals, or even when I was at Delhi Stock Exchange, I've done a lot of work for preferential allotments. So anything which complicates the process really hurts me personally, and any ease of doing things process really relieves me. So I am happy. I'm really happy with this webinar, the way it has turned out. Thanks a lot for Lokesh and Deepti and Sanjay ji for sharing their thoughts.
Okay. Okay. Last word. Lokesh, your word.
So I think most of the point has been covered. In fact, Sanjay ji has given a right picture. Ki we being an exchange or regulator, we are not aware of the pain point of the company. So we got the idea how, because preferential, we also understand it should be a faster. So SEBI is already working on ease. We can see the right issue timeline has been drastically reduced from T+23 days. The things can be happen. Why not in preferential? Yes, it can be happen in preferential. So that's what we are working on it. That we will reduce the timeline of preferential and will give a faster approval wherever there are problems. So what Sanjay ji has talked, we are always available. Or one call away, we are always available. The only thing is that sometimes what happens that company misuses, they call on Saturday, Sundays, and late nights to help you. But please, there should be a decorum. In case if we don't pick up the call, just send us a text because we have given our entire team mobile number in the NEEPs.
Lokesh, you should have two, you all people should have two telephone. One is 10 to
We have
6, which you are keeping in the office. You say this is in the office. And another phone number, you can keep it for this. Okay.
the thing is that the office timing end at till 9 o'clock, 10 o'clock. We are there in the office till 10
I know,
o'clock.
I know. I know this is very tough tough thing. Because I try always to give all answers. So one question has come now. I just want to tempting to give: is any open offer trigger on preferential allotment of convertible security when no control or threshold breach arises?
If no control and nothing, 25% and 5% doesn't happen, then no open offer will trigger.
Yes. Okay. 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 So, friends, it's a time to close this session, and I thank my co-panelists, Mr. Lokesh, Deepti, Sanjay, Jainji, and Anjali, and I thank NSC for hosting jointly with this program. And friends, I'll tell you, regulator is totally changing. SEBI is changing, and NSC is also, because NSC has requested and told us that industry is facing some problem. Let's come forward and we should organize the program and solve the problem of the industry by discussing one-to-one, by getting their views and getting their points of view. So friends, I'm closing this session. It's a 5:59, 6 o'clock we close. So we are on the dot. Just I want to announce that our next webinar is very, very important on 11th July on revised RPT industry standard, because that is it has changed the complete RPT disclosure, and the industry standard has given format. And I was chairman of the subcommittee, so I have worked in this. So we are inviting all the committee member, maximum committee member for this program. I request everyone, come forward, register yourself and discuss and understand what is the purpose. And second is, even if and then if you have any doubt, any communication, please tell us, so we will come out a clear FAQ on this issue. Till then, thank you very much.